If you're 65 or older and you carry even one credit card, there are 4 quiet shifts happening right now that could hit your wallet before your next statement even arrives, and almost none of them have been explained clearly anywhere. Some of these changes already happened without a single notice mailed to you. Some are court fights still being decided as we speak. And one of them is actively damaging credit scores of people who did everything right, simply because the rules moved and nobody sent the memo. Let's start with the one most people think they already understand, because that's exactly where the danger is hiding. You've probably heard at some point that the government was going to cap credit card late fees at $8. That proposal came from the Consumer Financial Protection Bureau back in March 2024, and the logic behind it was simple. The largest card issuers had been charging $30 for a first missed payment and up to $41 for every late payment after that in the same year. Figures the CFPB said had nothing to do with the actual cost of processing a late payment and everything to do with pure profit. Had it gone through, that $8 cap was projected to save American cardholders an estimated $10 billion every year. Here's what actually happened next. Within days of the rule being finalized, the U.S. Chamber of Commerce, the American Bankers Association, and a coalition of other industry groups sued in federal court in Texas, claiming the CFPB had overstepped its authority. A federal judge sided with them and blocked the rule before it ever took effect. Then, when a new administration took over the agency, the CFPB didn't just back off, it reversed itself completely, joining the very industry groups that sued it in a motion asking the court to kill the rule permanently. In April 2025, the judge granted that motion. The $8 cap isn't paused. It isn't pending. It's legally dead. Right now, most major banks are still charging $30 for that first missed payment and $41 for everyone after it. But here's the twist that makes this timely. On July the 7th and 8th of 2026, multiple financial outlets reported that the CFPB quietly submitted a new request for information on late fees and late payments to the White House's Office of Information and Regulatory Affairs. That kind of request is typically the opening move before a new rulemaking process begins. Will it lead anywhere? Analysts are doubtful, given how badly the last attempt collapsed in court. But the fact that the CFPB reopened the file at all tells you late fees are still on the agenda somewhere in Washington. So what does that mean for your wallet? This week, your late fee is almost certainly still sitting between $30 and $41 if you miss a due date at a major bank. The $8 cap is not protecting you. The new inquiry might change that eventually, or it might go nowhere. So don't build your budget around a protection that doesn't currently exist. Here's the fix that actually works today. Set up automatic payment of at least the minimum, not the full balance, just the minimum on every single credit card you hold. That one step means a late fee can't sneak up on you if you're traveling, sick, or simply forget a date. You can still pay more by hand whenever you want. Think of the automatic minimum as your insurance policy against a $41 surprise. And here's a trick almost nobody uses. If you do get hit with a late fee, call the number printed on the back of the card and simply ask them to remove it. Most major issuers will waive a first late fee for an account with a clean history. No interrogation, no paperwork, just one phone call and a polite ask. It works more often than people assume, and yet hardly anyone bothers to try. Now here's the second shift, and it's the one causing real damage because of a widespread misunderstanding. You've likely seen headlines claiming medical debt is being wiped off credit reports. And that's true, but only partly. And the gap between what people think that headline means and what it actually means is exactly where scores are getting hurt. Here's the accurate picture. Equifax, Experian, and TransUnion, the 3 major credit bureaus, adopted voluntary policies, not federal law, to stop reporting certain kinds of medical debt. Under those policies, medical debt that's already been paid off no longer shows up on your report. Medical debt under $500 doesn't show up either. And medical debt that's in collections, but less than a year old, also stays off your report. Notice what's missing from that list. Medical debt over $500 that remains unpaid and has sat in collections for more than a year can absolutely still appear on your credit report, and it can still drag your FICO score down significantly. And because these protections are voluntary rather than legally mandated, they exist only because the bureaus have chosen to keep honoring them. A federal rule from the Biden administration that would have locked these protections into law was struck down by a court in 2025. So the safety net you think you have is really just a policy choice that could shift again. Here's your practical move. Go to annualcreditreport.com, the official free credit report site required by federal law, and pull your reports from all 3 bureaus. Look specifically for medical debt entries. If you spot a balance over $500 that you believe is wrong, outdated, or already paid, you have the right to dispute it directly with the bureau, and that dispute is free and must be investigated within 30 days. If the debt turns out to be accurate and still unpaid, make resolving anything over $500 that's aged past a year your priority. On to the third shift, And this one is sneaking up on people precisely because these services were marketed as the safe alternative to credit cards. Buy now, pay later platforms, names like Affirm, Afterpay, and PayPal's Pay Later option let you split a purchase into installments, often interest-free over shorter terms. For years, one of the big selling points was that these purchases stayed invisible to the credit bureaus. That's no longer true. Starting in 2025 and expanding through 2026, major buy now, pay later providers began reporting account activity to Experian and TransUnion. Every new account you open can register as a fresh credit inquiry and pull down your average account age. A missed payment can be reported as a delinquency. And having several open buy now, pay later accounts at once can affect how your credit utilization is calculated. If you've spent decades carefully building a score above 800, this is exactly the kind of silent erosion that can undo years of discipline without you noticing. If you're planning to apply for a mortgage refinance, a home equity loan, or an auto loan sometime in the next 12 months, hold off on opening new buy now, pay later accounts during that window. The timing could cost you at the exact moment it matters most. And now the fourth shift, which touches the rewards points and airline miles many people have been quietly stockpiling for years. The Credit Card Competition Act has been introduced in Congress more than once and remains under active debate. The bill would force large credit card networks to let merchants route transactions through a competing payment network, essentially doing to credit cards what Congress already did to debit cards back in 2010. Banks and card issuers argue that if this passes, the interchange fees that currently fund rewards programs would shrink, and they'd respond by cutting back or eliminating cash back, airline miles, and other perks. To be clear, this bill is not passed. It isn't law. But the conversation around it isn't going away either. Here's the practical takeaway. Any large stockpile of miles or points you've been saving for a big redemption is, by the terms of most card agreements, an unsecured benefit that your issuer can change or reduce at any time, whether or not this legislation ever passes. Using the rewards you've already earned rather than hoarding them indefinitely while waiting for a perfect moment that may never arrive is generally the smarter play. So let's pull this all together in one place. Credit card late fees remain $30 to $41 at most major banks. The $8 cap was struck down in court and is not currently in effect, and the CFPB opened a fresh inquiry into late fees on July 7th, 2026, which may or may not lead to a new rule down the road. Protect yourself by setting up automatic minimum payments on every card you own, and if you ever do get hit with a late fee, call and ask for a waiver. Medical debt under $500, along with any medical debt that's already paid, currently stays off your credit report under voluntary bureau policy, but unpaid medical debt over $500 that's aged past a year can still show up and still hurt your score, so pull your free reports at annualcreditreport.com and check carefully. Buy now, pay later accounts, now report to the credit bureaus, and opening several at once or missing a payment can affect your FICO score in ways these services never used to. And rewards points sitting in your account are worth spending, not stockpiling indefinitely against an uncertain future. None of this requires buying anything or signing up for anything. It just requires knowing where the rules actually stand today instead of where they stood 2 years ago. If someone in your life, a parent, a sibling, a friend, still carries a credit card and hasn't heard any of this, share it with them before their next statement lands. It costs nothing to pass along, and it might save them a fee, a dispute, or a few points on a score they've spent decades building.